Today, folks, investors have recognized the extreme value setups in a lot of different small cap stocks out there. We've recently found some success last year with the likes of Aduro Clean Technologies, but today I've got one Canadian small cap that is trading at what I believe is severe discounted levels, a vertically integrated natural gas company that can not only take the oil out of the ground, produce that oil, but actually sell it with generators that are reducing energy bills by 25%. If this is a conversation you'd appreciate, hit that like button because this company is looking to be cash flow positive in the first quarter of 2024, and it's called Avila Energy Corp. The ticker is VIK. It is down 80% and it rode through that insane volatility, IPOing in the most volatile small cap period we've experienced by this wicked downturn that has persisted. But I think we're starting to find bottoms at an $8 million market cap. It's almost laughable. But again, we only can look at the balance sheet first and foremost because people just care about cash flow today. But with 45 million in assets, 17 million in liabilities, we're talking about damn near $28 million in underlying assets. That's like almost 3 times the value of the current market cap, which is just mind-blowing in and of itself, right? But let's talk about cash flow because this company is looking to be cash flow positive very shortly. We're going to break down how they're doing that. But as it stands today, with 3.5 million in revenue for the 9-month ending of the third quarter in 2023 is up pretty dramatically from the 2 million this year prior, and they've been able to get a loss for that 9-month ending of around 5 million compared to 2020 or 22 million basically in 2022. But I want to break this down because the company again is looking to expand dramatically. Avila's diversified and growing portfolio of 100% owned and operated wells, facilities, and pipelines in Alberta, Canada provides investors with exposure to natural gas and liquid production and conventional oil development that has the installed capacity to rapidly increase in 2024. As mentioned, the company is looking to produce about 2,000 barrels in 2024, which would put them well in a place of cash flow positive, positive earnings per share, because right now I believe they're producing between 600 and 650. They're positive between 650 and 700 barrels per day. So they're looking to achieve that basically in the first quarter of this year, which is going to be fascinating. They have a consolidation, 300 kilometers and 5 facilities of installed infrastructure to position Avila with that capacity to get to that 2,000 barrels this year. So there's going to be a lot to pay attention to, again, with that vertical integration, allowing them to expand their margins dramatically because they have 100% operated and kind of owned facilities here where they can actually produce this natural gas and get these barrels out there. But what makes it most intriguing above all these small cap companies, again, vertical integration, not only producing the energy, but being able to sell it and pair it with generators that have a huge amount of efficiency and something new on the market for people. A company in Europe, I believe, invented these generators that they spent $5 million buying the licensing rights to sell it in North America. And if you just take a look at this, it's very fascinating to break down just some of the comparables. Now, you might not be as privy to obviously some of these generators and their outputs, but if you can just take a look at basically the differences between some of the heat pumps and solar panels and some of these other things that exist with lower CO2 emissions, reduced electricity costs, which you kind of get out of solar and this generator, but not heat pump systems that currently exist, reduced heating cooling cost, which is funny because solar can't actually achieve a lot of that. You've got low maintenance cost. These generators are very low maintenance. Solar panels can be higher maintenance, easy installation, reliable and efficient, on-demand power, heat and cool, independent of the energy grid, reliable, consistent EV charging, and low capital investment cost. And the reason I'm bringing this up is because these generators are lowering the cost of people's natural gas bills by 25%, and they're reducing emissions by 50%. This company is heavily ESG focused, and it's part of their mission, which is very intriguing. And as far as I can tell from the stock standpoint, I think there were just some insiders that were finally just getting out. The market became more volatile. They took their money after IPOing, and it really tanked the stock. But again, this company is just located outside of Edmonton. I think there's some crazy huge potential here, and this is going to be one of those stories where you can pick it up now if you wanted to be interested in buying the stock, not as financial advice by any metric. It's just entertainment value. But if the stock does start picking up steam and getting into a cash flow place of positivity and gets to that 2,000 barrels a day, basically 3 to 4x in their current production, it's going to be a really interesting story, especially when they get into selling these generators on top of their business. So I'm very much looking forward to see how this energy stock evolves because it's much more nimble and much more neat compared to the mega cap oil giants out here that have been, I've been seeing a lot of decreasing value in things like Canadian Natural Resources or Enbridge, for example, whereas this company isn't so valued in the market yet. But these are just my opinions, and I pass it off to you. I'd love to know what you think in that comment section below.